So who wants swag? What I mean is, for those of you who've emailed who want the tax rep mug, the tax rep travel Yeti mug, the tax rep t-shirt, we love tax problems. If you're interested in getting some tax rep swag, you can't buy it. There's no store. We don't sell it. Here's what you do. In iTunes or Apple Podcasts, subscribe to the podcast, give us a 5-star review, take a screenshot of that and email it to us at hello@taxrepllc.com. hello@taxrepllc.com. Send it to us along with your address, and if you want the t-shirt, your t-shirt size, and we will send you out a piece of swag. Our pleasure. Okay, enjoy it. It's great stuff. All right. So again, if you want some swag, go out, subscribe to the podcast. I know in Apple and iTunes, you can actually give us a review, give us a 5-star review, email us a screenshot of that with your address and what piece of swag you want, and we will get it out to you, no problem. All right. Now, if you want to talk about building your practice, okay, and we're going to get real busy in 2021, so there's never been a better time. All right, join Tax Rep LLC. All right, join Tax Rep LLC, and trust me, we can help you build your practice, add an extra $100,000 to your bottom line, and get you involved in really representing taxpayers. Okay, so taxrepllc.com. Go out, sign up. We'll see you inside Tax Rep. Now, what do we use in our practice? All right. The only two sponsors we have of the podcast are the two pieces of software / vendors that we use for tax resolution. Tax Help software, okay, which is the cornerstone of our practice. Everything from transcripts to intelligent ordering overnight to actually doing our offers and all of our resolution forms. All right. So if you're interested, go to taxhelpsoftware.com. There are 2 discount codes we've arranged for you. All right. Tax Rep Trial, all caps, one word, will get you a 2-week free trial. Tax Rep 10, Tax Rep 10, all caps, one word, will get you 10% off. Go check it out. It is what we use day in and day out. All right. It's what we think is the best. That's why we use it. And it's the only sponsor we have because it's the only software that we use. Now, built into Tax Help software or as a standalone program is ENQ. And that is how we call the government and get in under 3 minutes. All right. And we've arranged for a special discount for our Tax Rep members and listeners. All right. I'll put the link in the description below. You can click on that link, go, you get 200 minutes for $19.95. It will change the way you practice. You can literally call the IRS, get to a human being in under 3 minutes, usually within 30 seconds. All right. So check out ENQ at the link below. Thanks for listening, guys, and enjoy this week's program. All right. So Michael, Steve, welcome back to the podcast. For the people who are listening, Mike and Steve were on initially talking to us about cryptocurrency. It was I went and looked, Steve, it was episode 32. All right. And I think we're recording now episode 95. So it's been a little while, but there's a lot going on in cryptocurrency and there's a lot going on in enforcement. And whenever you have enforcement in cryptocurrency, I'm like, I got to get Mike and Steve back on the show. And in all honesty, we've had stuff going on. You just had a program, I think Friday. So I think this is going to be very exciting to have you guys bring us up to speed. But for those people, Steve, and Mike, who aren't familiar with you, you know what, Steve? I guess why don't you tell us a little bit about your firm?
Sure. Thanks, Eric, and it's great to be back. And I'm looking at that episode 32 to episode 95. I think I may have said it before. You're the Tim Ferriss of tax when it comes to podcasts. So that's a pretty good compliment. So our firm, we're a boutique tax litigation and controversy firm. Hochman, Salkin, Toscher, Perez. We've been around for about 60 years. It was established by Bruce Hochman, who's now deceased, may rest in peace, and Abe Salkin. And, we've been doing pretty much the same thing for the last 60 years. I've been with the firm, I guess, since like 1987. So about 34 years. Michael has been about 25 years. We tend to grow slowly, or the people stick around. And really the center of our practice is resolving or litigating disputes with the Internal Revenue Service, and in California, including the California Franchise Tax Board and the other state agencies that we deal with. So that's really about us. Michael and I sort of got pulled into the crypto area a few years ago based upon some client issues. We thought it was going to be a big issue. Our former partner, Chuck Rettig, is now the commissioner. I remember 4 years ago, before Chuck left us, we were having discussions regarding cryptocurrency. And, this has always had great interest from the Internal Revenue Service for a whole lot of reasons. I think when we first recorded the podcast, maybe, I don't know when it was, a couple of years ago,
Right.
Cryptocurrency and virtual currency, Bitcoin, Ethereum, the price had already started to fall. The bubble had burst a bit. It reached its high of 20,000, and then it was maybe down to 6,000, 7,000.
Right.
And then, things were sort of quiet. The IRS has taken some activity, and I'm going to pitch it over to Mike to see, some of the things the IRS has done. But really, the big story is what's happened, in my mind, to the price. Two stories: the price of virtual currency, and two, the further acceptance of the corporate America of cryptocurrency. Those are really, really big things, which make it even more of an issue for the Internal Revenue Service, because more people are getting involved, and more people are, and now with the price rise, theoretically have a some sort of gain. Maybe now unrealized, maybe realized, but that's what the tax issues are all about. So that's sort of where we are.
Yeah, no, it's funny because I thought of you when I watched the price of crypto go up, because I remember you told me when we did the last podcast that, yeah, you'd thrown a little money in just to see, and you never really paid much attention to it. I don't know if you still have that, but that investment's done pretty well.
I have to tell you, as a percentage of investment, I'm opening my, I'm going to give a little plug here. I'm entitled to a Coinbase app on my phone. And I can tell you, when things were waning, it was down. My account had a value of maybe $70. I started with $200, and now it's up to $773.94. So as a percentage gain, it's great. Now, for all people listening, I'm a better lawyer than I am investor. Okay. So if I knew what I was doing, I would have listened to some of my clients and put more money in, but I'm not an investor or a trader. I'm a lawyer. So, right. But it's nice to see it at 774. It was down to, maybe 50 or $60. So yeah. We've done well.
Yes, no, absolutely. And so Mike, I mean, there has been, I mean, I don't want to go just diving into it, but there is a lot going on the government side as far as enforcement. And you guys, well, listen, you guys have been in this space a lot. I'm getting constant emails of you guys and the programs you're putting on. And by the way, if you're listening, if you are interested in learning more about all of the tax issues surrounding cryptocurrency, if you go out and just Google, I think it's Stafford, Mike and Steve have got a bunch of programs, and you can get them on demand, and you guys go through it from top to bottom. But Mike, if you can, why don't you bring us up to speed on what is happening?
Yeah, thanks, Eric. And Steve, I chuckle every time you tell the story about your Coinbase account, because you're a great investor. And it kind of makes me chuckle because the amounts are kind of small, but It's so in terms of the IRS, so we spoke with you maybe 2-3 years ago. There's been a lot of developments. I think the biggest development for I would see accountants or clients, public, relates to the tax return itself. And I just want to bring to everyone's attention, probably know it, for 2020, there's now a form question on the face of the tax return, and it's evolved over time. And Steve talked about what our practice does, and our practice really mirrors what the IRS does. And some of the best ways to think about where the government's heading is to see what changes they're making and to see what updates they've done. And so the first place that we sort of notice is in the last 6 months to a year or two, there's been some significant updates. The big one relates to the Form 1040. Now on the front of the return, the first question asked on the tax return is, at any time during the year, did you receive, sell, exchange, or otherwise acquire a financial interest in any virtual currency? So you stop and you pause for a second. You see, first of all, this is a very broad question. What is the government doing here? What are they getting at? And so it's not just getting at taxable transactions. They're really getting onto information about who holds or who has acquired virtual currency during the taxable year, and then also who has sold it and other things. So that's sort of a large notice. And it kind of reminds us, Steve and I, and yourself probably, about what we've been dealing with in the foreign arena with respect to foreign accounts and assets. There's always been a question on the tax return: do you have an interest in a foreign financial account on the Schedule B? But many accountants never asked the question, historically, until it became public and widely known. And now you have every accountant asking that question, because it's clearly known what FBARs are, the Form 8938s on the face of the return. Well, here too, a few years back, accountants very rarely asked the questions about foreign cryptocurrency. In fact, during examinations, agents never asked the question. And I think now it's one of the routine questions that many agents ask during an examination, even if it doesn't pertain to foreign assets or cryptocurrency.
Well, and I got to tell you, we our practice is very similar. The difference is, being in New Haven, Connecticut, we our practice is a lot like Frank Agostino's practice. We do a lot of civil criminal representation and litigation, but we also do a lot of IRS collection work. So we're doing 433s and offers and compromise. You guys do too, but we do it, and I think much more frequently. We tend to have small businesses. I will tell you, and so I don't know if you guys had a chance to listen to it, but Darren Guillot came on a few weeks ago, and what he was talking about is they are now using artificial intelligence. And Mike, I want to get back to like the face of the 1040. What they're doing, he said, is they are using artificial intelligence to take all of the foreign asset information they got from FATCA and from people's filings, and all of the information they've gotten from the John Doe summons on Coinbase, and they are now comparing that to the 433 submitted for offers for the last 2 years to deem people uncollectible, and for bankruptcy schedules where the IRS was noticed as a creditor, to see if people may have overlooked disclosing virtual currency and foreign assets. And they are now up 42% in the criminal referrals coming out of collection. So what I think the world is, the government is making the world smaller, and AI is going to help them do it. But by this, you're right, Mike, it does two things. By asking it on the 1040, one is, of course, hey, maybe you have a transaction, but it also lets the government know you have it. Right. And what's funny is, the week after I had Darren, I had Gary Alford, who, I don't know if you know Gary. Gary's our supervisory special agent in New Haven, but he's much more famous as the special agent in New York that broke the Silk Road case. And so Gary was on, and we were covering Silk Road, and he was talking about Bitcoin and Tor, and how it the government didn't know who had Bitcoin. Well, again, they're making every effort to figure it out. And it is going to be very interesting as to where they go with this.
Yeah, and I concur with everything you said. This form question is basically twofold. One, it gives information to the government and allows them to know how many people they're really dealing with. Interestingly, when we talk about the Coinbase enforcement proceedings going back covering years 2013 to 2015, the affidavit submitted in that case by the agent who was supporting that indicated there was only 700 to 800 filed forms picking up cryptocurrency at the time for those periods. This puts it squarely in the government's sort of database, consistent with what you're saying. And then two, when it comes time to, mistakes have been made or information is not on the face of the return, this return question, which initially, incidentally, was more buried 2 or 3 forms in, was on Schedule 1 initially, made it to the first question on the return. It's going to become very difficult for preparers not to ask the question, or taxpayers not to, give that information to their accountants.
Well, and listen, you guys know Chuck better than I do, and I like to think I know Chuck pretty well. Chuck Rettig, who's our commissioner. Look, Chuck's an aggressive guy, and he's driving the government to get more aggressive. The fraud office, right? I mean, Damon and they've stood up that office, and if I were a criminal, I'd be worried. The government is really pulling all of its resources together. But, with this, for the people listening, we were talking about offers and uncollectible. What I think this also does is it forces us as the practitioner, you have to ask the question. We have now, so guys, when we do an offer, we have a checklist, right? Here's what we need, right? We 3 months of bank statements and all this stuff. Not only do we asked about, hey, do you have or have you had in the last 6 years any virtual currency? We are now automating it. We're going to actually require clients to affirmatively say yes or no, because one is I need to know as far as before we submit this financial, but I also have to protect the client from themselves, who thinks, the government won't know, right? Government's not going to know.
Yeah, I think you're spot on, Eric. What we're seeing, in my judgment, is sort of a perfect storm happening. The government is finally starting to use this vast treasure trove of data and apply these applications for not sending revenue agents or revenue officers to look at piles of documents, which never got looked at historically. That's the concern. But feeding this information into computers to sort it. You said something which that's why I sort of smiled when you said the due diligence you were doing on the offers, because you're really protecting your clients. Historically, collection cases were a very small part of criminal tax cases. Yes, we had them, but they were certainly the smallest part. In the last few years, they have been, even if you exclude employment taxes, which are inevitably collection cases, we've seen a tremendous increase. I think a year ago, the government, I think it was Darren said, our numbers are way up. We're, of all the referrals coming from the operating divisions, collection had 60%.
Yep.
Whoa, take a step back. Never has that happened before. So you have that. And now he just recently on your podcast said they're up this year again. That should tell people a lot. And doing the due diligence you're doing on the front end can prevent some very sad consequences. Let me just make one other point regarding the question on the 1040 and the questions on the Form 433 regarding assets. There is nothing more powerful for the government in terms of a criminal case against an individual, whether it's collection or the tax return, to have a blatant false statement on that return, a no when it should have been a yes, an omission when there should have been something there. That is clear. Juries understand that. And the government wants that. That's one of the reasons I'm sure that question is now on the return, and it's going to be there. So I think a lot of caution. Things could be confused. And here's our biggest fear, that someone really didn't know they invested. Here's the fact pattern that that keeps me up. Somebody invests, they have a big gain, right? We've just had 300 or 400% run up. They've got some money now. They invest in another cryptocurrency because now they're players. Boom, they lose it all. By the time of the end of the year, they don't want to even think about it.
Right.
Okay. And they may even just want to forget about it. But I'll just pitch it back to Mike. Mike, can they just forget about that, or is that a problem?
Well, you've raised an issue that we've seen over the past, 3, 4, 5 years, where the price fluctuates. Are clients, and so they may not realize that every year stands on its own, or they may not realize, and we've seen with currencies being exchanged for other currencies, that it creates taxability in all facets of ways. And the client thinks he's in the same economic position. He has a virtual currency before and after. So yeah, it's a problem. I think this question goes a long way. It's almost a game changer, because it goes a long way in creating the communication between the professionals who are really deputized to deal with these issues up front, so they don't get a notice. And one of the other things I really wanted to sort of emphasize is that the government has not only collected information and put it on the form 433A or put it on the income tax return, but has also utilized information through its summons enforcement proceedings against Coinbase and other places, and has sent out these soft letter campaigns, right? Those are people who may not have got it quite right. And those people who have not got it quite right may have been because they didn't communicate with their accountant, or they didn't know what they were supposed to do because the rules are kind of complicated. But one of the things since our last podcast with Eric that I wanted to sort of talk about and flesh out here that becomes important is that the government took the information from Coinbase and other areas and reached out to the public through a soft ladder campaign back in the middle of 2019. COVID hit. So there may not have been, there was like 10,000 letters that went out. There may not have been another tranche of those letters, but certainly there's follow-up. And these 3 letters were there intending to tell a person, hey, we have information about your particular taxes. And there are different variations of the letter. One letter says you have 30 days to amend your returns. The other 2 type of letters say, hey, we have information. You might want to consider doing a whole host of things, including a voluntary disclosure or correcting your taxes. And I think a lot of the remedial activity that I've seen in the past 2-3 years originates either from a contact like that, a soft letter campaign, which is an excellent idea that our commissioner has sort of done in this area as well as other areas, or it originates from a scare, a separation between husband and wife, and a threat, or business partnership sort of maybe threatens to do certain things. And so when it comes time to make corrective action, I think the government sends the appropriate message. And in that case, these soft letter campaigns, which reach back through the years 13 through 17. Yeah.
Yeah. I mean, but, so regardless of the IRS enforcement, Elon Musk, bought, I think, $1.5 billion of virtual currency. Warren Buffett. Why do you think suddenly there's so much interest from legitimate businesses and investors? Is it just simply the price? Is it here to stay? What do you think is driving this?
I have my views, and I'm not sure it's right. I think there is a very big interest and demand for blockchain technology and what it could do for all sorts of accounting, and commerce, digital contracts. So there's a big interest. It's taken a while. I'd say 2 years ago, you had many on Wall Street, the big banks, saying we're not interested, and now you see people with an interest. I think it's just grown. I think there was a statistic. Somebody said, well, if investment advisors start telling people with money that they should have at least 1% of their money for diversification in cryptocurrency, then the value of cryptocurrency, because the demand now will go way up, will go up 1,000% from where it is. I'm just giving numbers. Maybe it's not that much, or maybe it's even more. So I don't know. As you can see from my very astute investment skills, yes, I've managed to make like $650. So I'm not the really one to ask that question, but it's limited supply. Theoretically, the Bitcoin is of limited supply. It's like gold. There's only so much, and when demand goes up, then the price will go up. That's the way I understand it. I think probably Warren Buffett views virtual currency or Bitcoin as like gold. He's always said, gold doesn't produce income. I'm not interested in it. So there is an investment motive, but I think the real interest that's happened is they've woken up to the alternative of digital currencies for exchange of value. Governments are now looking at digital currencies. So there's a great interest all over. That's my views, but I don't know whether that's correct or not. I'm not running out and
liquidating your IRA to
No.
yeah.
I can say it's very clear that I can lose money on traditional stocks and bonds, so I don't need cryptocurrency to do that. But it is there, and I think many smart financial institutions and investors, they're starting to look at it more. But what's also interesting, a lot of celebrities now are using these, type of digital as collector's items. So it's all over the board, but we're moving to a digital world. COVID accelerated it, and one can see more interest in digital everything, digital world. And what's happening, it's not the use of cryptocurrency as a medium of exchange, because that's primarily what it is. It's as a store of value. And if you assume it does have store of value, and this year says it was storing some value, it was growing, that's got to be of amazing interest to the IRS. But here's the more important interest. The thought or the idea that cryptocurrency transactions can be anonymous. They're not through traditional banking systems, and the government is concerned that people are using cryptocurrencies to exchange things, and some illegal, some not illegal, and that is a way to avoid the taxation. So I was recently on a panel, I think Friday, with the Federal Bar Association, with the topic was the new Office of Fraud Enforcement, which was stood up this year. On the panel was Jim Lee, the
Chief of Criminal,
Damon Rowe, the new Executive Director of the Office of Fraud Enforcement, and Carolyn Shank, the National Fraud Council.
Yep.
They are standing up. And one of the things that Carolyn said, and I think they've said it before, but it picked up a lot of press, when it comes to cryptocurrency transactions, she said two important things. We can see you. Okay. They've hired contractors, and I'm sure they're acquiring their own expertise. It may be a little hard to see these transactions. They have to find the right information and get the correct attribution to the taxpayer, but eventually it's hiding in plain sight. And that's what they're interested in. And they're going to be, they haven't made a lot of pure criminal tax cases based upon just crypto. Most of the crypto cases have involved other, either Title 18 fraud cases or other situations. But they're in process. I'm confident of that, and they're getting it down. And my advice is, one, it's really no place to hide. It's very vulnerable. And if you did make mistakes in the past, uh, now may be the time to clean those up. To do it under the government's voluntary disclosure practice. So they're there. They're devoting a very large amount of resources toward this because I think it's two things. One, because they think there are tax dollars out there, and two, there is a dark part of virtual currency which we haven't talked about, and the use of virtual currency for transactions which in and of themselves are illegal. Uh, that's of interest to the IRS Criminal Investigation Division. And they've been out there. You mentioned Gary Alford.
Yep.
Their expertise in this area came, or was developed during being the lead investigators on Silk Road.
Yep.
That had little to do with tax and had everything to do with very, very serious drug and other crimes going on, a whole variety of crimes. So, and that's what, CI is interested in. That they're not only tax cops, they're cops.
Mhm.
And and at what they do, in my view, in terms of financial investigations, if not the best, they're one of the best in the federal government, and they certainly are the leaders in cryptocurrency enforcement at this point.
Yeah, no, and you can understand why they're so interested in this. So the question I wanted, and by the way, I also understand the valid reasons to have this. If you're in a country where the banking system is not like that in the U.S., there's no such thing as FDIC insurance. I understand the attraction of having your money in cryptocurrency where, I had a client once who, in an FBAR case, was in Ukraine, and he was explaining to me, you don't keep your money in a bank in Ukraine. He said, you could put it in there in the morning, go back in the afternoon, it could be gone. So I do understand the attraction of it. Now, but obviously, the government is viewing it as, we can't control it. We don't know what's going on. And there is a dark side to it, Silk Road, and by the way, many other sites that have now replaced it. But, Steve, I've heard you mention more than once crypto. You talked about it as the tale of two cities. All right. And can you explain what you mean by that?
Yes, that's you have the legitimate side, the legitimate city where people are engaging in a medium of exchange and investment. And by the way, which is the vast majority of people engaged in cryptocurrency transactions. But then you have a dark side, the Silk Road side, which is a very, very dark city. And this is what I've said before, that because of its ostensible a way to avoid detection, not through the banking system. That's why that gives the concern. And it's a very immature industry. Okay. It's just starting. And right now, and I think there are proposals, the services come out for, what type of additional reporting there might be through the exchanges like Coinbase or Gemini or the other ones. The problem is that there are so many other exchanges out there and private transactions. It's very difficult. So, and here is the big risk to taxpayers. If the IRS thinks that people are engaging in this have some sort of taint to it, and I'm not saying they do, but it's got some legacy issues, similar to what I would say, in the cannabis area. It's the same thing. It presents a little more exposure to the taxpayer. So you've got to be careful. It's very complex. So, and it will be years before that legacy in both crypto and cannabis wear off, which it will, because both of them are going mainstream and have their, legitimate functions, at least for most people believe so.
Right. Right. And so I have had, by the way, both Damon and Carolyn, well, actually together. I had Damon Rowe and Carolyn Schenk on to talk about the Office of Fraud Enforcement. And it is interesting that how they are now pulling all of those resources together. And it's funny. We used to sort of joke that imagine if the government actually got its act together, what it could do. And they're getting their act together. And I must say, for those of us who still have 4 kids to put through college, we appreciate it. No, I am. It's crazy. Do you see this going? Do you see this going anywhere but up, as far as a priority and using resources?
I think as we come out of COVID, and we are, knock on wood, it looks like we are, everybody's been shell shocked by COVID. Some industries have adapted a little better than others, but as we come out, it's pretty amazing that I think the service was able to stand up the Office of Fraud Enforcement and other programs during COVID. But what I see is it's in its infant stages. I think there's training going on across the operating divisions, excuse me, and it's going to be. I mean, this all started maybe when a statistic was floated maybe 2-3 years ago, right around the time Mr. Rettig became commissioner, as I recall it, that only 7% of the cases that the Criminal Investigation Division works came from the operating divisions. Well, that sounded awful low, whether it was or not. And I think there is a commitment from the service to make sure that that number is the appropriate number. I don't know what that number should be, but they're out there training their revenue officers, as you've seen from your statistics, their revenue agents, that where there is fraud, you need to consider the application of these tools. One is a criminal referral. The other is the civil fraud penalty. I've been practicing 40 years, and I can just say there's only been a handful of civil fraud cases. I may have tried more criminal fraud cases than civil fraud cases, and we all know there's not a lot of criminal tax trials around. And that's because most of the civil fraud penalties, I guess in my experience, just sort of follow, the criminal cases. That is going to change. We're going to see a lot more of civil fraud penalties, and we're going to see it. We'll see it in the tax court 3 years from now. And there's a big difference. Most tax cases, the government does not have the burden of proof. The taxpayer does. But in a fraud case, I'm talking only civilly now.
Yep.
That the government has the burden of proof by clear and convincing evidence. And my experience in that area is that the tax court has held the government to a fairly robust standard, as it should. In California, there's old law which our appellate courts have said the fraud penalty is odious and should not be imposed without real forethought as to what's going on.
Yep.
And so I think what's going to change, I think they view that as a major tool in their toolbox. Why? Not every case can be worked as a criminal case. they're going to use the criminal cases for the ones that they think get the biggest bang, are easier to prove. Remember, the government has a conviction rate in criminal tax cases above 93%. I don't know what it is now, 94%, because of the way they work the cases. Okay, they're pretty. They call out the ones that are going to have problems, and they keep the good ones. And so, and that's what they've been very good at for years. Once in a while, you get one which isn't as good, and we get to try them, and if we're lucky enough, get an acquittal. But that's rare. But they're going to continue, and so I for one, we're going to see more civil fraud penalties. We're going to be training our younger lawyers. They're going to be growing up, learning how to try a civil fraud case.
Yep. No, I have noticed on the civil side, the auditors in particular are getting much more aggressive. Almost inappropriately. And there's always an aspect to that. When the government's going to take the gloves off, there's always a sort of over exuberance sometimes by some of the players. But no, they are. I just, in the last 2 months, I have 2 cases where the auditor is talking about civil fraud penalties. All right. And I have seen them over the years, but it was not routine. I've also seen them getting, and not to get too far off point, much more aggressive about prepare penalties.
We've not seen, we've seen increased activity. I can't say I concur with areas of overly aggression, but look, that's going to happen. Yeah. There are going to be people coming out off the guardrails on both sides. So, but what we will see is we're going to see that in the appropriate case, they're going to want to consider these things. Now, the service has a problem coming out of COVID because they're way behind. And they're going to have to, in my view, they don't listen to me, but they're going to have to triage cases. That we all need to get back to business, and judgments are going to have to be made as to dwelling on the past or dwelling on the future. And they need to get coverage out there. I've always been very big, and that tax compliance and deterrence is out there by having the cop on the beat. Okay, what that translates to the IRS is more audit coverage and getting out there and kicking the tires. If everybody thought that once a year their tax return would be questioned, we'd have a lot less problems. And it's a challenge for the IRS. I think they're meeting that challenge. Some of the, historically, there was maybe an attitude of the service, well, we're getting less, we'll just do less. I can tell you the attitude of this administration is we're going to do more with what we have and leverage our resources. I think you've probably seen the words in some of their speeches. I don't know who was the first one to say it, but force multipliers. They're very cognizant of that. And I think you're going to see that because that's important. There's got to be, all this comes down to is fairness. Everybody's got to be treated fair. And that's what they're out there trying to do. But we're going to see more of this going on. And from our point of view, think about it. Wow, it's going to be the government's burden of proof. If you practice in the tax court, you know that normally it's your burden of proof. That can be, most cases aren't decided on the burden of proof, but it really does change the dynamic. And we're going to see a lot of that. And it's going to be, like I said, I've been practicing about 40 years. And if Mike allows me and my other partners allow me, who knows? I may go as long as my other partner, Abe Salton, who's 83 and still going pretty strong. I doubt I'll last that long, but I'm looking forward to the next 10 years and what this is going to look like, because I think we are seeing game changers going on in tax enforcement.
Yeah, no, and I think there is going to be, and Mike, I'd like your take on this too. I think, look, enforcement is coming back. I mean, the government has made that very clear. Chuck said that when he got appointed. All right, when that enforcement was coming back, and it is now. Coronavirus, as you said, Steve, kind of threw a monkey wrench into it, but I think I'm betting we're going to see more enforcement across the board as they can use more AI and automation. I think they're going to be able to do way more with way less. Not even necessarily way less, but way more with what they have.
Yeah, and I'd like to jump in there and talk a little bit about, to the government's credit, this is a really, as we talked about, it's a really technical area. The government has dedicated the resources, and similar that we've seen in other initiatives by the government, and we've talked about the foreign area and otherwise, the government comes out and it clarifies its rules, and it does things to telegraph to the public, hey, you got to get this right. Now, maybe if the issue is murky, like for example, there's been clarification on in this area and in crypto on the accounting methods, you can't prosecute someone over unreported income if the accounting method is not so clear, and if someone consistently use a different accounting method. But the government came out in the last year, clarified the rules, and I think that's what they need to do and continue to do in order to be able to establish, okay, we see that there's some ambiguity, but the period of that sort of honeymoon period of ambiguity has passed. We all know cryptocurrency needs to be reported, mining income, exchanges, all the technical issues that are there. We're learning what the government's position is. Those cases will be litigated in certain instances, but at the end of the day, the government is educating through its its notices and its announcements and FAQs. At the same time, it's hammer by asserting potentially the potential for fraud or other penalties. And then at the same time, it's offering a softer landing by either through these soft ladder campaigns or otherwise. So I see the government, when it's a new issue, it needs to get ahead of the curve, and it's hard because it's real technical. We hear about the government looking for on-ramps and off-ramps where the money comes in and coming out. Anonymity is a big part, like they were in the foreign world, but the government has pierced that. And once they pierce that, the public is on notice now that, hey, this is what you got to do. Your accountants are the deputized to figure out the information. And if you don't get it quite right, it's not a matter of ambiguity anymore. It's a matter of something that should be done.
Right. No, I think, I think we are going to see interesting times. So guys, listen, this has been very helpful. And what I'd love to do is we'll just bring you back as things keep evolving. We'll if you guys are, as long as you're willing to keep doing this, let's keep doing it. But, but honestly, any final thoughts for and let's be honest, most of our audience, attorneys and accountants who are listening to this, what do you guys think are the big takeaways?
Mike, would you want to go first? You want me to go first?
Why don't you go first, and then I'll fill in.
Sure. I will just leave it with you have a lot of passion and expertise on the part of the IRS, passion, expertise, and concern. So they're going to be in this space, and now's the time to for taxpayers to get their house in order. It's only March. Don't play games. They would love to be able to pursue somebody, in a pure criminal crypto case. And professionals need to school their clients. This is not an area that they want to be involved in. One of our partners, which Eric, you know, Ed Robbins,
Yep.
Ed had an expression, you know, about, you know, and Ed was a long-time government lawyer, prosecutor, and he'd say, stay away from that. It's radioactive. And, you know, cryptocurrency has become a little radioactive, and you want to be treated with care. You know, God willing, you should be able to make money and use it to conduct commerce. But no, as the National Fraud Council said, we see you. So Mike and I have both had cases with Carolyn when she was out here with IRS counsel, and I take her at her word. So don't throw caution to the wind. Anyway, Michael, for your final words.
Yeah, I just sort of, you know, I concur with that. From more of a big picture approach, you know, whenever people are interested in it again because of the 50,000 price. When we were talking about it in 2017, it was the 20,000 price. People are going to make money and lose money. And if they're making money, it's great. They just got to put it on a return. If they lose money, you know, you get those losses. So you'll see it potentially from both ends. But one thing we haven't really talked about, but it's sort of obvious to the government, is that whenever you deal with cryptocurrency, you can buy a Tesla now with one Bitcoin, all right, for $50,000 that you paid $3,500 a year ago or 2 years ago. Just keep in mind, when you do that, there's going to be a 1099 reporting at some level. There's going to be information given to the government. You're going to have to report that. And that's whether you buy a Tesla or whether you buy stock or exchange it somewhere. That's all going to be on the grid. Coinbase announced they're changing from a 1099K to more of a 1099 MIS. So all these transactions, even though people may not see it or think about it, is going to result in taxable transactions, and just plan for it, right? Plan for the losses, harvest those losses before year end, or plan for the gains. It's you don't have as much money as you think because it's a taxable transaction.
Yeah. No, it's an evolving area, both good and, well, both, you know, pro business as well as, you know, the other more sinister aspects of it. But I think we are going to see interesting times. And, you know, again, from my perspective, be aware of it. One, ask your clients the questions. Ask about it and get the information, because, and just, you know, I've been on the receiving end of a client that, when criminals showed up, attempted to blame us for not disclosing an asset. And thankfully, with all the emails and all the notes and everything back and forth, it was very clear he had never told us. But you know, I think if you're an accountant, not only do you have to ask, make sure you document that, because when if it does hit the fan, you don't want special agents standing at your front door while you're trying to figure out what the hell you did. So with that, guys, listen, thank you for this. And for those of you listening, go check out the stuff, like I said, Mike and Steve have done. I know they've done a lot of programs on Stafford. I sat through one, you know, to keep up on this. And guys, listen, thank you for taking the time out. As always, we appreciate it.
Eric, thank you. It's always a pleasure having a conversation. I love this format, and congratulations on you know, what did you say, number 95? That's excellent.
Yeah,
So
dumb enough
when
to
it comes
keep going.
to tax, you're Tim Ferriss. So congratulations.
And I'll take that. I love Tim Ferriss's stuff. I'll take that as a compliment.
All right, you should.
Thank you, Eric.
Okay.
All right,
Have
guys.
a great
Thank
day.
you. You too.
All righty. Bye-bye.
Bye-bye.